Welcome to There Is No Alternative, a podcast about entrepreneurship, where I talk to founders, investors, and executives in the consumer world. I'm Tina Bou-Saba, founder of CXT Investments, where I invest in consumer brands and technology. I've invested in more than 40 companies over the past decade. Along the way, I've been lucky to meet incredibly talented and resilient leaders who have built great businesses and well-known brands. Entrepreneurship can be deeply rewarding and also extremely challenging. Why do some people choose this path? How are they wired? Are entrepreneurs born or made? And where do they get so much energy? I created this podcast to explore these questions and hopefully inspire others who are considering taking the entrepreneurial leap. Welcome to There Is No Alternative, a podcast about entrepreneurship. I'm Tina Bou-Saba, and today we are joined by my friend Sarah Foley, managing partner at InviNext Growth Partners. Sarah invests in brands that consumers can't live without before they know they can't live without them. Her portfolio companies include Supergoop, Jupiter, Banza, and many more high-growth, well-known brands. Sarah is one of my favorite investors. She is cool, funny, and incredibly smart. I always value her perspective on investing, fundraising, and working with founders. Lucky for us, today she is going to share some of her insights with us. Hi, Sarah.
Hi, I'm so excited for this. And I think of you all of the time when I'm doing my work. We have had so many fun conversations over a long period of time. So I'm just thrilled to be here.
Same. Well, thank you so much for joining us. Okay, so a warm-up question.
Yeah.
What did you have for breakfast today?
I had my chocolate lavaka smoothie. So it's a brand of high protein, high nutrient dense powder that I add to my form of milk to get some extra protein boost. But I love it. I get it on Amazon and I have it most mornings. It gives me a lot of fuel for the rest of the morning/afternoon.
I love it. So you're like fully living the wellness lifestyle. Totally.
Exactly.
Well, then on that note, I do have to ask you one other thing. Do you have an Aura ring or an 8 sleep mattress or any of those kinds of things?
Zero. I do not. I haven't gone there yet. I would like something that keeps track of more than just my steps. I have some app that is tracking my sleep a bit, but the Aura Ring is probably the next step for me.
I know. I'm seeing them a lot.
Yes, definitely seeing them a lot.
Okay. Well, we have so much to discuss. So there are two big things that I am excited to talk to you about. One is your journey as an entrepreneur and starting your firm and your journey as an investor. And then two, of course, is how you think about investing in brands and how you pick, how you work with companies and all that great stuff.
Yeah.
So lots to discuss today.
I agree. Let's see if we can get through it.
All right, let's go. Let's get to it. Okay, great. So now you come from a family of serial entrepreneurs, but you started off your career at Morgan Stanley. So did I.
Yes, exactly.
How did you make that leap? Was there a pivotal moment or something where you said, it's time?
I've been thinking about this question because there wasn't necessarily one pivotal moment. I think it was just a progression of investing and types of investments. I mean, obviously, all in privately owned businesses. But I moved from Morgan Stanley in M&A advisory to a lot of a financial investment firm, right, which were a lot of the clients that I advised on the teams at Morgan Stanley. And I just felt what they are doing, raising capital, finding companies to invest in, providing that value to grow, keep them streamlined, build a better business before they ultimately tried to sell it for more money than they bought it was extremely challenging. And it was something that I therefore was kind of attracted to. But I started more private equity style investing and over years experimented with my own angel investing and venture investing. And I love this stage because of the growth characteristics, right, of what we invest in and watching that happen. And I love the collaborative nature of more of the venture type of investment so that, together more minds around the table can help de-risk these businesses, hopefully faster.
Mm-hmm. And when you were doing private equity investing, so, before this
Yeah.
stage, were you focused on consumer or were you doing other sectors?
We were pretty agnostic. We were really interested in companies of a certain size. Now you'd call them lower middle market. So they
Mhm.
were positive cash flow, but they were largely entrepreneurially owned, sometimes family, founder owned. There were a couple of brands in the consumer sector that probably originally ignited my love for consumer and this tangibility of the category you and I talk about all of the time, as well as that emotional connection that powers the why we go and buy that thing wherever we may find it and gives me great satisfaction. So I think my progression from advisory to private equity to opening the door around what does it mean to get involved earlier in the company's development was exciting.
Yep. Yep. Totally agree. So, okay. So you also, before your firm, you were at an early stage food company. Tell us about that. That's so interesting.
It was pretty accidental, actually, and had a friend working for a cookie company based here in New York called Eleni's, and they were quite frankly going through a number of challenges post kind of hurricane, a new ERP system, a new website, some growth, but trying to figure out how to streamline operations. And she asked if I could come in and consult for a couple of weeks. That turned into about 2.5 years of work with Eleni, the founder, and really helping her build more data into her
Mhm.
decision making, right? Use the data that she has had for years, kind of growing her business, but try to turn that into a more systematic method of making decisions and figuring out where she really should be growing, what kind of resources of money and time she should use against those new channels. She was largely direct to consumer and had her
Uh-huh.
own retail. But we thought a lot about unit economics, kind of channel economics, and then specific retailers, again, to just help her make more capital efficient decisions. And I really liked it. But what it did also expose me to was that turning strategy when you may sit, on the board or you might be an investor and you're trying to be helpful into something that's executable and the team, the leadership required to motivate the execution is real. And it takes certain kinds of talent. And it really takes really great individuals who can lead their teams, especially when things are challenging, especially when you are capital restrained. And so for me, a big learning was watching that unfold, sometimes
Mhm.
not watching that unfold, and what that could teach me as I continued to learn how to be a better investor. But it absolutely gave me a lot more empathy for what business owners, founders, management teams go through leading and executing against strategy day to day.
That is such valuable insight. I definitely, you and I have talked about this before, but
Yeah,
I think that
that's
many
right.
investors think that it's almost like a magic button you can push, execute, right?
I know.
And of course, it's so hard. I was recently catching up with an entrepreneur and he joked that he's like, how many people say, you should just, and it's like, yeah,
Yes.
I know,
So
right?
simple. Thank you.
If only. If only. Totally, totally. Okay. So that all really ties together though, because you had this early advisory experience, then the investor, the private equity experience, and then that operating experience
Mm-hmm.
again that really
Mm-hmm.
gave you that empathy and that understanding for what it is actually like in the day to day of building a consumer business.
Yes, exactly.
So then you said, okay, I want to start my own firm to invest in consumer businesses. So, how did you decide to do that?
It was actually quite easy because one of my partners had the idea
Okay.
for what is now our strategy, investing in
Mhm.
emerging growth consumer brands. Mark Hauser, a longtime partner, believed there was a big lack of capital. Right, it was highly underrepresented to invest in consumer-facing businesses, brands, a lot of products and some
Mhm.
experiences, etc., that were underrepresented, not getting the type of capital, certainly not necessarily all benefiting from, an experienced kind of investor's point of view, and that we should be able to find some opportunity. It was earlier in the growth of direct to consumer as a business model, but more of a channel of distribution that we talk about often, you and I.
Yeah.
And we have another fellow, Richard, who was involved and has an incredible branding perspective. And I think in our world, you absolutely have to have perspective on brand. How is that product? How is that experience messaging its differentiation to the consumer? How are they getting excited about it? And then tapping into that emotion that is so critical in consumer to making a purchase decision. So the combination of those experiences we thought would be useful, and we could find some opportunity to invest in early on and have more of an impact on how these brands were scaling. And we learned a lot, right? We've learned a lot about really great brands that have great leadership and have execution plans that were top
Mhm.
notch, as well as those that didn't. That is one learning on building a firm, right, in the fund management business that you do have to start to accept, and that is that not every investment in our early stage growth kind of category is going to work.
Right, right. A very I think a hard learning, but a
Yeah,
really important one, and I think also I would imagine that when you were working in private equity, that was that was not the case, right?
right, right.
Everything ha
They're just more mature, right? There is
Yeah,
a lot lower risk profile on them failing,
yeah.
right, going out of business because they have more traction and they're profitable. So they should have options on how to keep the business solvent and continuing to operate. Here it's different, which is the nature of, early stage investing too. We make a few more bets in order to spread the risk and do what we can, like we've always talked about as well, around how do we be valuable? How do we be helpful to our founders as they are making foundational,
Mhm.
strategic, and then everyday decisions that can hopefully help grow and de risk the businesses over time?
Yeah. Well, I definitely wanna talk to you about that more, but I wanna go back to one thing that you said
Yeah.
early. So, you had mentioned investing in emerging growth brands. Can you define emerging growth and how you think about the scope of things
Mm.
that would be sort of in versus out for you?
So I think of emerging growth as the stage at which you have launched, you have a channel or two. So maybe it's your own
Mhm.
Shopify site and Amazon, or it's one particular brick and mortar retailer, but you've got points of proof on traction and kind of product and market fit. And you are experimenting
Mhm.
with how to best message the brand and its attributes and differentiation, how to capture that early adopter that expands into more contiguous sets
Yeah.
of consumers. And before you've kind of reached profitability and are then much more sure of how you can continue to grow and investments in people and marketing, branding that will fuel incremental growth, but you're already profitable. So I think of it as this phase of kind of seed to B, where you
Mhm.
might have 1 million or 2 million of revenue and up to maybe 15 or 20, just depending again on how capital efficient you are. But in that space between pre-seed concept investing and more traditional growth equity investing.
Yeah. Okay, that's super helpful. That totally makes sense. I think so one other thing that I would love to get your perspective
Yeah.
on that I think is going to fall into that is the founder piece. And so, you've got the business metrics and these various early things, but then you guys have talked about investing in maverick founders. I love that term. Talk more about that. What are you looking for? Do you know it when you see it? Like, how does it come together in your mind?
It's such a great question, and I kind of use that word somewhat provocatively, right?
Mhm.
Is there is a personality and an attitude to this person who decides they're going to take this leap and figure out how to solve this kind of problem that they've experienced, and therefore build a base of consumers that are going to follow.
Mm.
It's also not meant to be necessarily all about the founder either.
Mhm.
I think they have to be, right? They have to be relatable and approachable. So, a few things that we think about when we're looking at, the hundreds of opportunity that kind of
Yeah.
comes through your pipeline annually are first the why. Why does this particular product need to exist? Why is it different enough, right, from other products? What is the founder's why that catapulted and kind of accelerated the idea to go out and start to do this? What's their story and how relatable? How much will it resonate? That stuff is really important because I think the consumer is sophisticated. They
Definitely.
are thinking about what is it that I like that he or she or they may be doing with a product that I don't have in my house, but I believe that there's a mission behind their why, and I want to become a part of it. I want to be affiliated with it. So we think a lot about that why and how it resonates right across the product category and the way in which they want to kind of build their distribution and reach the customer. That differentiation I mentioned is critical, right? There's nothing proprietary about what we do. All we end up really doing is building the intellectual property around brand equity, brand identity, but how they're messaging differentiation. And if they have an innate kind of view and talent around messaging, and by messaging, I mean either pitching to me, pitching to the
Mhm.
consumer, what channels they're using and how are they actually, again, getting their point across is you can start to tell early on. It'll evolve, but you can tell if they've got a knack for it. And again, that's not necessarily, it can be learned. I think it's also, again,
Mm.
innate. And we think a lot about that, especially if they've kept it pretty simple, because it doesn't need to get complicated to be successful. And then because I'm a finance nerd, the other thing I will look at is just generally kind of how efficient they are capital, with their capital. How much have they raised? How much revenue have they kind of generated in total? And if that is a kind of large number, more revenue to capital, that means they're on to something and it's been working. And hopefully those fundamentals of the way they've set up the business will continue to work. But those are three things that we definitely use to help filter.
That's great. That's great. I think that pitching, particularly in consumer or maybe even everywhere,
Yeah,
it's so important because like you're always selling as the founders.
absolutely.
You're selling to vendors, potential partners, to people you're trying to hire. And so that's like such a core part of the job
Yes.
that I think it's like crucially important from the investor perspective.
I do too. You really have to be a great communicator.
Yes,
And,
communicate. Yeah. Yeah.
it doesn't have to be complicated,
No.
but there has to be the hook that resonates.
Mm,
And trying to contrive that hook is a bad idea, I believe, because I think everybody can see through it.
yes.
That's where, again, the kind of passion behind your why, how you believe this product or experience is going to be relatable to your target consumer, and how they're going to go tell their friends, you've got to go try this. It was amazing. I loved it. And that just takes experience. It takes experimentation, but it takes, I think, a big passion for why you're doing it.
Yep. Yep. So what is interesting to you from a category perspective within consumer? What are you looking at these days?
So we are in the process of next fundraising. I have a new partner involved named Debbie Perlman, who brings
Amazing.
a wealth of experience. She is the operator. She's got great kind of
Yeah.
investment cred too, but she brings a perspective from her work at Revlon and some other boards and her own investments to the way in which we're kind of developing some themes that make them richer, in my opinion. So, one area that we think a lot about is wellness because it's such a
Mhm.
big category. But within wellness, we think a lot about functionality. So,
Yeah.
whether that's an ingredient, whether it's particular type of service that you may go experience somewhere. Think maybe med spa or think one of the many clubs that are popping up and the types of wellness services that they offer. But we think about that a lot and within there, kind of the functionality around protein and fiber that's on a large kind of growth trajectory, really driven by our increasing use of GLP-1s and peptides, right? That I think are at the really early innings. And I think we're also going to learn these other incremental benefits from microdosing GLP-1 that will
Yeah.
filter into other wellness categories. For example, I think menopause, perimenopause oriented consumers figuring out their own wellness plan are likely going to be benefiting from GLP-1s for a variety of reasons that aren't just focused on weight. And I think, if we're eating maybe less, but we're trying to be more conscious of our nutrients, maybe our dining kind of decisions are going to look differently. And so how does that affect the restaurant industry? So that's one large kind of, it has a lot of
I love that.
permutations that
Yeah.
we want to keep in the forefronts of our mind. The other one, I think, is fan engagement. And by that, I mean the experiences that fans take pride in, take pleasure in, are willing to pay for. And it doesn't have to be fan equals sports.
Yeah.
It certainly is a big part of it. But we think about what type of fans, brands, consumer packaged goods brands are building and how they are building their awareness by providing some type of unique experience. So we don't know exactly maybe how that will manifest itself. Debbie and I talk all of the time around this probably confluence of media and media content generation becoming an increasingly big part of building a brand. You see ELF do it. They're taking bigger risks, like by partnering with Reese Witherspoon and that collaboration that they're building. But it's another way of reaching your customer, messaging what your brand is about, not just the products, and building more and more loyalty, but reasons for them to come back and visit and continue to really engage with the brand that just, I think, builds longer term loyalty and then obviously value of that consumer.
That is so interesting.
I mean,
Yeah.
I would love to figure out ways that, as earlier stage investors, we can participate in like real in-person live events, whether that is the business itself or it is a service that helps produce them for on behalf of various brands. That's one thing we think about. And then we think about the technology solutions that could be used to continue to reach, engage, and build more loyalty with your fans, whether it's for your brand, for your products, or for your team. But we're really trying to find more examples of how that's going to come together.
Fascinating. I love how you guys are thinking about that. Well, I look, I agree with you. It's such an insightful perspective. I feel like many brands today are like little media companies in
Yes,
terms of
exactly.
the content creation, whether it's
Exactly.
their own or they're whitelisting, creators, but it's just there's this like insatiable appetite in the community content. Content con
Exactly.
Yeah.
And how they are distributing it, right?
Yeah.
Certainly, they're utilizing all sorts of social channels, and there are 5, 6, 7, 8 of them now that you can
Right.
utilize, and they're making decisions around how you are allocating time and money across
Yeah.
just those 6 or 7 is one thing, but in person is, in my opinion, the deepest way to build connection that builds affiliation with brands. So more of it, I think, will happen. I think consumers are certainly demanding more as we are fully kind of through the pandemic and the experience or lack of thereof that those brought. But I just think, I mean, you saw the US Open here in New York City in September was it was, I think, their largest event yet by kind of revenue and attendance. And there were a lot of brands, both big and small, who worked with the organization to provide an in-person experience around their products, around their brand, and just captures so many eyeballs. And building brand awareness, as you well know, is a critical part of kind of building a
Yeah.
successful brand. It's not just acquiring customers, converting them, and hoping they come back.
Yeah. Yeah, I mean, I think awareness is, like, one of the most challenging things, and how can you
Yes,
do that, and how can you do that without, without without running out of money? It's so
exactly.
interesting to think about because I feel like as investors, we go to a lot of conferences and shows and, the Expo West or the Beauty Connect or all these
Yeah,
different events. And I know for sure there are some like Ulta has a consumer event, Sephora has I think one annual consumer event just as examples. But I mean, you raise a great point, like that type of thing, but for the consumer
right. That's
and
right.
could be so interesting. Huh.
And your point about these brands are also are media companies, it's absolutely, absolutely right. They
Mhm.
are responsible for creating the content that we consume
Yeah.
that builds, again, that awareness to affinity, to loyalty around their product offering, their kind of service offering. So if they're managing a lot of forms of content, either originally created by them or, to your point, created by others on behalf of the business and the brand, it's a bigger mission than I feel
Yeah.
like it has been as you have more and more and more channels and form of content and length of content to distribute it on YouTube to Instagram to
Mhm.
Snapchat, right? Where those snips range significantly, dramatically in length. So just keeping, it together on how best to create that content, you have to have a budget for experimenting. You never know, right? And you cannot rely on virality as the kind of solution at all. So how are these brands and their teams really building in today's world to best position themselves to do so? And we haven't even talked about an AI layer that could be useful in that exercise, and they are coming. They are definitely coming. We're trying to learn more real
Yeah.
time about it. We have not made anything that's specifically an AI powered solution yet, but want to integrate it into our own business.
It's so interesting. Yeah, I mean, it feels like we're on the cusp of
Yeah.
that. And I think about like even a decade ago maybe when if you were starting a brand, it wasn't a sure bet that you would put your website on Shopify. And
Yeah.
then
Yeah,
today
exactly.
crazy not to, right? And then over the past decade, there's of course this been this explosion, thousands and thousands of apps in on the Shopify ecosystem to do
Yeah,
everything, right? From like the really big things
exactly.
like the Klaviyo's of the world to like every little like niche thing. And so it feels like we're on the cusp of something like that for brands, but in this with Gen AI and just like tools, and I don't know, it's
I
above my
know.
pay grade, but, like, it definitely feels like there is just we're at the very beginning of that.
I we're in like the first quarter of the
Mhm.
first inning, it
Yeah,
feels,
yeah, yeah.
especially as it relates to consumer brand building. I think, a lot of functional areas will benefit from
Mhm.
solutions that
For
just
sure,
make the team more efficient.
for sure, for sure.
However, and supply chain management, right? I mean, figuring out a better way to manage your inventory with just faster kind of financial planning and analysis tools will be great. Helps the business manage cash even more tightly.
Definitely.
However, using it to generate the content
Exactly.
is
Right,
a
the
step
forward-facing
that's
stuff.
but that's going to be the consumer is smart. again. So
Definitely.
faking, spotting the fake is a real thing, particularly in our world of building an emotional connection around a brand that builds loyalty with your intended kind of customer. And as that customer continues to grow themselves. So I think we have to be mindful, to slightly careful around, how far to take it. But I look forward to this generation of brands in 2025 versus 2015 that
Yes.
have all of these resources available to them that will lower the cost of starting and building their brand at the same time because it's a lower
Yes.
cost. It's even that much easier to to start your own company and start your own brand. And that's where leadership, the founders, their focus, their mission, the why, to kind of go back to the beginning, I think is going to
Um,
be even more critical, even more critical.
so interesting. Yeah, I mean, I think that, like, in a world where consumers are using whether it's Gemini or ChatGPT or whatever it may be to figure out like what's the best X or what should I do for Y, I think like that content, right? All that's even more important, right? Because I
Yeah.
think that's
Yeah.
what ultimately is like getting surfaced. And so it's like all the more important. Yeah, it's so interesting.
Well, and now ChatGPT is enabling commerce.
Yes.
Right?
Yes.
So
Yes.
we don't even
Yeah,
know what that's gonna look like, but it
totally.
will require brands to, take another pass at
Mhm.
web pages, product description
Yeah,
pages in
definitely.
order to,
Definitely.
capture that traffic, that type of search traffic
Yeah,
in a way that they hadn't had to think about before.
right.
So again, we are trying to learn more, we're trying to lean into some of our network
Yeah.
advisors, some of our friends that are ahead of where we understand
Mhm,
yet and how it will apply, so that we can be thoughtful, make sure that our founders are thinking about it and provide some kind of resource
mhm.
to them as they're making some decisions. But it's exciting all at the same time.
It definitely is. So, okay, so on a related point, how do you guys as a firm, like kind of but zooming out a little bit, how
Yeah.
do you guys think about working with your portfolio companies? What do you feel like are the levers or like the areas that investors like you can be most helpful and effective?
I think about it in two ways, which really reflect both Debbie and her
Mhm.
experience and then mine, because they are wonderfully largely separate. We have a
Mhm.
lot of
Yeah.
investing kind of overlap,
Yeah.
but what Debbie does, I think, magically well is think about strategy. So you know how hard it is when you are down in the weeds every day to pull back
Yes,
and
definitely.
think about strategy, strategic decisions, longer term growth, the vision in a way that you can then translate into executable kind of moments and lead the team to do so. She has been doing that throughout most of her career, a lot of it
Mhm.
in consumer, but not always, and really taking, as she often calls it, kind of legacy assets and transitioning them, repositioning them into something that has growth attributes attached to it again. So, yes, we expect our brands are very much growing, but as she thinks about product development, consumer striations, right? Who are the consumers and how are you expanding that consumer set? How are you thinking about team and scaling that team? And definitely thinking around brand and positioning. She is ideal, and I'm thrilled to have her involved because she can
Yeah.
speak that language and
Yeah.
has credibility and the scar tissue to really, I think, empathize, but constructively help our founders think about what they want to do next. And she's not afraid of bumps in the road at all. And God knows we know that
Yeah.
the road to start from starting to exit is not a straight line. So that's what I lean heavily on Debbie to be thinking about
Right.
as it
Yeah.
comes to sourcing, to diligence, and then how we will get involved. Where I play most of, I think my role is largely around confirm. in kind of organizational management and the kind of systems or the tools and the things that we're trying to use to do our job a bit better. I don't make those decisions on my own, but it's something I like to think about so that we can be productive and spend our time on finding companies and helping them rather than managing the business of a fund in a firm. I certainly have the fund management experience on
Yeah.
audits and tax and capital calls and LP
Mhm.
communication and so on and so forth. And then I like to spend my time really thinking about with each company, what are they doing to get ready for the next raise?
Yeah.
And how are we going to position for that next raise? And then working backward from there to make sure some of the tools that they should have in place are in place, such as financials and kind of crisp projections and detail that's not just top down, but bottoms up, and giving them the resources and helping them find the resources that they can utilize to do that better. But then really thinking about what's the story that we're going to tell to position for this next round for what amount, and then who are we going to approach to build that interest and try to make as many of those introductions, not just when they're raising the capital, but in advance, right? As you said, you're always raising capital. And so you can't stop having those conversations just because the current round just closed. You can take a month off and then you need to get back into it and dedicate time within your kind of week to doing the prospecting.
Yep. Yep. And so to go back to something that you were just saying, like on the finance point, because I think that that's something that, particularly in the consumer space, for a long time was maybe like less appreciated, even, really focusing on your gross margin and then just thinking about
Yeah.
like overall having an organized approach to managing the cash flow of the business and stuff. How do you guys what specific advice do you give to companies and how do you think about, when they should outsource it, when they should hire in? Like, what have you seen based on your experience?
Well, the good news is there are more outsourced
Mhm.
partners providing that service now than there was a decade ago, maybe even 5 years ago, which just legitimizes, right, that fundamental
Yeah.
area of managing your company is so critical and shouldn't be ignored. Then I think it depends on the super skill strengths set that the team has. So if none of them have had much, financial planning,
Yeah.
modeling kind of experience in their background, then I encourage them to find it as soon as possible and have a few that we have worked with that we've liked and recommend, but it's really how it's certainly relationship and fit as well as kind of cost. But I think they should have that early, like even hundreds of thousands of dollars of revenue, having
Yeah.
somebody who's really helping you think about your bookkeeping and how that translates into your projections for your own benefit on planning and resourcing capital to how you will come across when you're raising that next round of capital. And the tighter you kind of can have that picture, the more appreciated I believe it is with the investor base too.
Yeah. No, that definitely makes sense. So, kind of on that note, like what advice would you give to founders today? What's your single most important piece of advice?
It takes a decade to build a brand.
Oh, so good. Yeah.
Be honest with yourself about how important this why is to you and, dedicate a decade of your life to building it. Now, hopefully it happens earlier, but most often it is like 8 to 10 to 12 years. And I think you've just got to be prepared for the long haul.
Yeah, and I think and it's so important that for investors and consumer who understand that, right? That
Yes.
it
And our expectation is it takes a decade. We like to invest at like year 3 to
yes,
year 7,
yep,
right? But plenty of risk to share in
yep,
that timeline
for
and that
sure.
journey. I just, the examples that we have in our first portfolio of exits were years 10 and 12.
Wow.
So
Which
I
companies
just,
were those?
Supergoop was 12 and Knix, the women's undergarments business, was 10.
Wow. Okay. And those are both two amazing exits. So wait, let's talk about that because those are, I mean, amazing, amazing, iconic brands in their respective categories. Like, what are the takeaways there? And I know, of course, for investors, our hindsight is perfect. But what are the patterns? What do you see that like you learned from those investments that you take to, future ones?
Let's see. Both companies had excellent top leadership, and
Mhm.
whether it was both founder and or the senior kind of help that and folks they brought in who were in chief level roles or really helping drive decisions, hiring those who can execute against those decisions and bringing, fresh eyes to solving the challenges that come up inevitably all of the time. But their resilience, right? Their passion, honestly, passion, passion, passion for really helping solve the challenge they experienced or really bring the vision of the founder to life, I think were exemplary. So that was really, really important. Now, did I know that that was going to be the case going in? Not again with 100% certainty, but just the boxes that those companies kind of checked were great, and this obviously worked out. I mentioned the kind of passion that is really important to that emotional connection around building the story, building the branding,
Yeah.
finding the next layer of customer. They both had pretty impressive, I think, financial characteristics too. And in the case of Knix, Joanna was just one of the most capital efficient brands we'd invested in at the time. She was also further along. Her revenue was higher than any other company we invested in at that point, but she had not raised that much capital. In fact, the first time I wanted to invest in Knix, I couldn't because she was profitable. So it's that again, it's just their ability to
Yeah.
see the kind of friction around why they wanted to develop the product, how they believed it would resonate with their consumers, how passionately they pursued their consumers while building a brand that meant something to them and their consumers. I mean, Joanna sourced her models, right, originally from customers, would have open calls. And
Love that.
again, just one other way in which she was able to quickly, I think, build and kind of layer up on how her consumer base would be her biggest advocate, right? And the brand's largest mouthpiece.
I love that. I always like you before you mentioned the why, and I think
Yeah.
that's so crucially important. And I feel like I don't know Joanna or Holly well.
Yeah.
My impression of both of them was they were founders that they had this strong sense of mission,
Hmm.
a business with a really strong sense of mission, though, right? So it was like bigger than just selling products. And even though they were all, of course, also incredibly effective at selling products. Those are 2 great ones.
Absolutely, right. Holly was inspired by one of her closest friends who
Yeah,
developed skin cancer at a really early age in their
yeah.
20s, and she wanted you wanted to eliminate that if at all possible and kind of focused on creating effective products that
Yeah.
people wanted to wear and not just had
Mhm.
to wear. And then Joanna's mother was an OBGYN and in Canada and would talk a lot about women's health, particularly on the gynecological side, postpartum, aging, etc. And that's what inspired her to start a leak-proof underwear product
Mhm.
company that grew into both garments, bras and underwears, but really embraced the everyday kind of woman.
Yes.
And I think that comes across clearly in her branding and her kind of her all of her creative earlier on. Now, she's gotten to the point she's so big that she can embrace some people that have higher celebrity around
Yeah.
their kind of
Yep.
personalities as she continues to build awareness and has expanded the product line, which is amazing to watch. It's amazing to watch.
Mhm. But I think there are really important lessons there around, like, what actually resonates with people, you know what I mean? And
Yeah, it
how
has to be
Mm.
authentic. Yeah,
Yeah.
it has to be authentic
Yes.
to the kind of brand and therefore, their ability to connect with their consumer and grow
Yep.
that customer base.
Yep. I love that. So true. Okay. Last question for you. This has been amazing.
And we're
So
almost done. Oh my
you
gosh.
are, as an entrepreneur, you have to get up every day and you've a zillion things. You've got an exploding inbox, and I'm sure a zillion things you have to do. Like, how do you stay energized and, for that, the marathon that is building a successful investment firm?
It is honestly, it's not easy,
No.
right? What do I do? Try to unplug on Saturday
Mm-hmm. Mm-hmm.
and just not think about what I have to do or what I'm not getting done fast enough and unplug to recharge. I definitely try to be pretty religious about that. Go shopping. So, meaning I love to go when especially I travel to the Walmart, the Target, the Whole Foods, the Sprouts, the Costco, the Sam's, the more kind of the Ultas and the Sephoras, but I try to hit, one of the major
So
retailers in our
fun. Yeah.
various like channels to just go and look and see. We've talked about before who is on the shelf that is in the portfolio, who is on the shelf that I know, and then who's not, because that's, another angle of sourcing more opportunity for us. What I wish I would be able to do more, and that's what I'm going to rely on the younger folks around our team to do, is be on all of the socials, figuring out, what's going on as signals there. I just don't have enough time in the day, and that's what they're much more skilled at doing, quite frankly. But I often also talk about with the team, what are you seeing? And a part of every weekly pipeline meeting is what's interesting to you? What have you seen? What have you experienced? What are you watching? What kind of brands are coming your way? What's really resonating? And we try to stay kind of fresh from that
Yeah.
perspective too.
I love that. That's like the really fun part about this,
Yes. Yes.
but I agree, it's hard, right? Because I mean,
Yeah.
you could spend 6 hours a day on TikTok, and you
Yeah.
definitely
And you just
you can't
can't.
tell your LP, "Sorry, I'm busy on TikTok." Wait, well, okay, so, like, any interesting thing? Like, what's come up recently that you think is cool or interesting?
Clear water with 20 grams of protein.
So, I
And
literally in my inbox just this morning, one of these, no joke. Oh my
yeah.
god.
So
Oh,
how again, I don't know if we're at peak protein. Some
yeah.
days it feels like it. That said, I certainly never get enough protein or fiber in my daily diet. But I worry we're moving away from the authentic kind of source of protein into ingredients, I'm sure, that are highly legitimate, but are kind of pushing the envelope on a a clear protein is usually like an isolate that gets included into it gets added to a beverage, could be carbonated, but there's like nothing like my lavaca smoothie in the morning is dense. It's
Yes.
thick and
Yes.
therefore it feels substantial. I don't know if I would consider adding a clear, high protein, carbonated or not, water beverage to my regimen and feel like I'm getting good quality protein. I'd have to be convinced. So that's one thing. And then we're certainly all efficacy around ingredients, whether it's in food or in beverages or in beauty products,
Yeah.
skin, face, hair, or even in ingestibles like the supplements. A lot of supplements we've seen too across all types of use cases.
Yeah.
They just have that sticky nature, right, to the business model that's really attractive,
Yes.
but it has to be effective. It has to be effective in, what's the benefit of taking that. Was just on the phone with a founder yesterday who I admire so much. She's got a hair supplement product as part of her lineup,
Mhm.
but she's building a new category. And so we talked a lot about, Debbie and I talk about this all the time. What amount of capital will you need to build the educational part of your brand, particularly, right, when it's in a new category, menopause, perimenopause, and the conversation, right, that we've been watching happen the last few years is great. But the brands that are in the business have definitely had to put more capital toward education, not just branding and awareness. And you just have to factor that in. And it may be all for the better, for the better. but you as an investor you have to expect that that's going to be part of the funding required, I think, to really build a successful brand.
Yeah, and that is tricky. You're absolutely right. And I think that like if you going back to the point that you were making about the young folks on your team and just
Yeah.
on social media, the thing is like that woman is not spending her time on TikTok and Instagram
Right.
that much, right? Not in the same way that the younger person is. And so I feel like it's how do you reach her even from
Hmm.
the education perspective? It's tricky, right? Because
Hmm.
there's like a different, communication strategy.
I know. I feel maybe the Gen Xers won't benefit from it quite as much as the millennial generation
Yeah,
who
that's a
is
good point.
coming
That's a good
into kind
point.
of
Yeah.
potential perimenopause stage and are much more digitally maybe kind of
Mhm.
native and picking it up. But that still means these brands have got to create the content in the length and format that's best suitable for TikTok to Instagram to Facebook to YouTube and even connected
Yeah.
TV. Even connected TV
Yes,
is
that's a
proving
great
to
point.
be effective kind of communication channel there too, which we shouldn't ignore, right?
No,
It
you're
can be
right.
done now on a pretty cost-effective basis. Getting into details, but I do think, again, some of these categories that are building a new category, not just disrupting it,
Yes.
you have
Yes.
to build that educational piece of kind of funding into overall capital.
Totally, totally. But I was just talking about this with someone, like, I do feel like if you look at even, like, recent M&A that has happened in this space and, like, going to Supergoop or Touchland, like, there is
Yeah.
this
Yes.
category creation that
Yes.
I feel and I think Knix would go in that bucket also, right? And
Yeah. Next, and things were all
yes.
early kind of
Yes.
movers in creating this alternative sports product, right,
Yes.
for women that has grown and now completely legitimate and mega multi-billion dollars in size. So, but yeah, she had to spend a decade getting there.
Yep. Yep. Okay. Amazing, Sarah. So before you go, what is your like desert island product? It could be in any category, but you can only bring one thing with you.
I knew you were going to ask this, and it's probably the one I didn't prepare for. Okay, I know what it is. It is my subscription to Cure, Cure, founded by Lauren, which is hydration packets that
So
I would
good.
add to whatever water I
Yes.
could find on that desert island to keep me healthier and electrolyte hydrated longer.
Amazing. I love it. I love it. Thank you so much. This has been amazing.
My
So excited to
pleasure.
have you.
I'm so excited for you in this amazing, huge endeavor, and I'm so thrilled to be asked and be a part of it. So thank you, Tina.
If you liked this episode, find more at cxtinvestments.com and follow me, Tina Bou-Saba, on LinkedIn.